So more Trump trades for you. This time, a bit of an overview, as it were, of the biggest S&P 500 riser since his electoral victory. And let me tell you what I'm looking for. There's a hell of a lot of analysis, but don't worry, I've done it for you. What I've done with this is, first of all, when I show you the charts, do you agree with the reward target? Is it too ambitious? What I've done with it is look at least a 40% feasible return on current and historic trends, and preferably 100% return on those existing trends. The past is not a guarantee of the future, but at least it'll point us in the right direction. Secondly, is the market stop loss too close? Is the volatility of the stock so great that you'd have to put the stop loss so far away that it makes the trade or the investment too risky? Is the return to risk at least 2 to 1? So the distance to the stop loss 2 to 1. I do all these calculations for you. If it does not show 7, 8, 9, or 10 on my value growth income scoring, then it's obviously going to be higher risk. And that's a critical factor for me. Is the MACD a measure of momentum, the average stock prices in short and medium term? Is it oversold? Is it rising? If not, then there's an increased danger also of it falling. Does the weekly and monthly MACD also rise? Is the stock too volatile? Are the drawdowns too steep? Are the recoveries too slow? Did you check the news? You might want to check the news on a stock, for instance. Are you happy with the stop loss being hit? Would not be something which would worry you if it did happen. I'm also going to go through, for instance, Charter and Disney, which met the special situation criteria, and MACD oversold and rising. So I'll go into those in greater detail, but also why I have certain concerns and how to handle those concerns. So don't be blind and think, oh, that's it, pile in. And my own insights are also important in what I'm seeing and hearing from my industry, in particular what some of the big money is going into. So I'll give you an example of the problems we face in trying to do this. Take Axon Enterprises. Now, you may well be happy with what the analysts say and the average returns, the average frequency with which it's a positive month. The stop loss will be marked by this, but there is a problem. Whilst that projection does tie in with some of these steeper projections here of its historic growth, the fundamental problem with this and why it wouldn't meet my criteria is we're at uncharted territory. It's very high. Now, that could continue going, and you would get your sufficient returns for the risk you're taking. But for me, that's just too much. I'd rather have a more sensible one. Now, if you're on my Great Investments program, I've got about 40 to go through, and I'll work down which ones out of those 40 Trump trades, and there's only about 3 which hit the sweet spot. The rest, and this is a warning to everybody, the rest have massive dangers, and the dangers usually, for most of the ones that I've got on here, the dangers are that they're really moving on momentum. They're not necessarily moving on having also a cheaper valuation, having good revenue growth. And where forecasts are optimistic, the biggest danger therefore is if they should miss those forecasts, they're going to take a thumping because they're not undervalued, they're not necessarily growing, so they've got a greater downside potential. So again, it restricts it. Again, by the way, just to give this an example, why would that be a Trump trade? Well, energy devices under the Taser brand. Say no more. Okay, so if you're on the Great Investments program, I'll go through the other 40. This is just an example to show the public of how difficult it is at the moment with these Trump trades. There's a lot of people moving on momentum, and that's risky. We're really looking at investments where we're mitigating the risk. And now you can see the difference between investing, where you're saying no to most things, and trading, where you're saying yes to most things. We're not here to trade because this is more suitable for a pension, a SIP, an ISA. Whereas if you are trading, well, there you go. There's the formula. The problem with trading is you're more likely to fail, you're more likely to lose, you're more likely to risk too much money. Okay, so prefer the ones which fit the investment criteria, and that's what I'll show you more of. So have a look at alpeshpatel.com/links and my Telegram, YouTube, and TikTok channels. And if you're on the Great Investments program, you'll get this on the private Telegram channel and all the others as well. Thank you.